What's up, everyone? Excited to give this video today about XPeng, which is a Chinese EV company that has been rocketing higher over the past couple trading days, even over the past couple weeks, you could say. So this company has seen a massive move in reaction to China pledging $72 billion in tax breaks for EVs and other green cars to help spur demand and keep that supply coming. So this is not shocking, right? I mean, when you consider what happened in the United States, we saw massive subsidy in this kind of green space, and then we saw that demand pick up, and then we saw supply obviously follow that. So it's not super shocking to see that the EV car makers in China are reacting positively to this news, as this was a major precursor for bullish demand and an increase in production when this government investment really happened in the United States. So we're seeing that plan kind of follow suit in China here. So not I do think this is a very good sign for shares, and the move higher really is definitely justified here. And then what I'll do in this video is I'll go through the chart here and give a price prediction on shares. I'll go through short interest as well, and then I'll dive into the fundamentals of the company, and then I'll jump into the financials and compare those financials to the peers, and then I'll go into the analyst ratings for the stock. We just had Goldman Sachs actually initiate a buy rating on this company here, which I thought was pretty interesting. So with that being said, let's try to give a price prediction on this stock. This is not financial advice, but we saw we saw shares come up to test this $20 resistance level, which is where shares had bottomed out in May of 2022, also where shares had bottomed out in March of 2022. So this level seems like a significant level of support. It's acted as a significant level of support in the past. Now that we come up to test this level, we can consider this level a resistance level. Past support becomes new resistance. So yes, we moved above it today, but we're actually trading right below it. I really wouldn't consider this break of resistance firmly broken, or that the resistance level could now become new support until we see a daily candle close above this resistance level. So still waiting for that to happen. If we don't get that, well, then I think we could probably get a move back down to the daily moving averages at about 11 bucks. And then, we could see a larger move higher over the coming weeks once we come down to those daily moving averages. So that's the first situation, if you will, in which I'll buy some shares, is if we come down to these DMAs, hold, and then move higher. Secondly, if we actually close the daily candle above this level, then I think we could see a significant move higher, without having to come back down to test these daily moving averages. So those are the two situations in which I'll be buying some shares. And then when we take a look at the next major level of resistance, so we can kind of give a logical price target for this stock, I see the next major level of resistance at about 31 bucks. 1 second here, this is messing up. So I think we could get a move up to this $31 level for shares, which would obviously, be a good amount, which would be a good move for the stock, would be about a 50% gain for shares there. So once again, just to reiterate, two scenarios. I believe we come down to the daily moving averages, move higher. That would be one situation in which I buy some shares. The other situation in which I turn bullish on the stock would be if we go over 20 bucks, close a daily candle above this resistance level and continue higher. Personally, if you put a gun to my head and told me to pick which situation is more likely, I would say that we probably close the daily candle over this resistance level, and that's based on the fact that we have very bullish momentum for shares. So we had the 50-day moving average cross over the 200-day moving average on July 3rd, which for those that don't know is called a golden cross and implies bullish momentum. So when you see that momentum be quite bullish, and that's kind of coinciding with this move above resistance, I do believe that makes it likely that that resistance level holds. But like I said, though, I'll be looking for a daily candle to close over that resistance level before I kind of jump into shares. So I'm not on the hook yet for that prediction until we get a close above that resistance level for the stock. And then it's also worth noting that shares are overbought according to RSI, which for those that don't know, RSI basically anytime RSI reads over 70, it signifies an overbought condition, which is present in this stock right now. But it's not the end all be all. Shares can still move higher and be technically overbought. We can see that happens, here on July 5th. Shares were overbought, but we continued higher. And then sometimes it can lead to a pullback, though. So on March 30th, shares were overbought, pulled back over the coming days. So it's not the end all be all, but it does seem that shares could find some selling pressure off this overbought condition. But as I said, I'm waiting for two of these scenarios to kind of play out before I dive headfirst into shares. And then this is always something I like to cover. So this is a screen for the best months for the stock on its history. So which months for the stock does the company typically do well in? Which months does the stock typically do poorly in? Well, we can see here that in July, shares typically rise 1%, and then in August, shares typically drop 5%. So, only a 1% gain in July, which isn't great, obviously. And then we have this this bearish seasonality trend for August, September, and October up and coming. Only 2 years of data here, so not very firm there, but it's always something I like to cover. And then let's take a look at short interest. So short interest is showing a 3.2 days to cover. That basically means that it takes 3.2 days of average volume to cover the shares that are sold short. Currently, they're about 9% of the float is sold short. So you add it all up, it does seem like a short squeeze isn't super likely here. So if I had to kind of give it a grade, which I always do on these stocks, I would give it basically a D plus to a C minus in terms of short squeeze likelihood. Then with that being said, let's take a look at the company's fundamentals. So this is a company, this is an article posted by Juxtaposed Ideas on Seeking Alpha. And they make a couple good points here, so I wanted to cover all of this. So XPEV strategic restructuring, including entering the mass market and reduction operational costs, showing promising progress thus far. Robust pre-orders from the former's new C6 model to be delivered from July 2023 onwards, thanks to the SUV's affordable price point of RMB 313,000 at the midpoint. So definitely seeing a good amount of pre-orders for the company's G6 model. In addition, the automaker has finally launched the navigation guided pilot software to its existing customers, allowing vehicles to navigate city streets and highways with driver supervision. Sounds a little familiar, right? It's pretty similar to Tesla's system. With the platform already live in Zhangzhou and Shenzhen, Beijing, and Shanghai, we may see the company report greater traction in sales ahead, significantly aided by the accelerated launch in multiple cities by the second half of 2023. The cadence may eventually boost XPEV's revenue stream, assuming the XNGP software is offered as a standalone software as a service to other automakers in China. So this is very interesting here because when you consider like what Tesla does, right, they're not going to ever get full self-driving regulation to allow them to operate that full self-driving in China. That's going to be an in-house and a domestic company that gets the full self-driving kind of underway for China. So this XPEV system could really be the full self-driving system that reigns supreme in Chinese markets, which, as this article states, provides a massive opportunity to lease out that software, right? So if you're NIO and XPEV is way ahead of you in terms of full self-driving, well, it makes more sense just to lease out the software than kind of start from scratch. So the management's commentary in recent earnings calls proves optimistic as well, with its current production capacity insufficient to meet growing demand, combined with the robust demand for its P7i sedan model and G9 SUV model. We may see the automaker's deliveries improve from henceforth. While it remains uncertain when XPEV may achieve break even, much less positive EPS, we suppose the optimistic cadence from XP and GP, the navigation guided pilot software system, may sustain its execution and stock prices in the near term. So the excitement is really all around this navigation guided pilot. This is especially when Tesla is unlikely to introduce its full self-driving platform in China, which I just laid out for you. While XPEV may face competition domestically, we are not over concerned now due to China's large market size and different end use cases in autonomous driving. So that autonomous driving piece kind of makes this company different from the other Chinese EV players. So, and like the article says, the EV market in China is huge. It's really seen as kind of a status symbol to have an EV. So you're seeing a lot of customers pay up for EVs, which is obviously beneficial to XPeng and NIO and the others in China. So all that being said, let's take a look at the company's financials. So price to book ratio is at 2.6 times, which is basically right in line with the sector median of 2.3. So I think trading at a 2.6 times price to book value is pretty solid. For those that don't know, price to book value basically puts the market cap relative to the book value of the company. So the company's market cap is 2.6 times its book value. And then when we take a look at the company's PE, obviously the company isn't making any money at this point in time, so there's not much for me to go off of there. But the book value looks pretty solid on its face. And then let's take a look at revenue growth here. So we can see all these growth numbers look okay, but revenue growth for the past 12 months is at minus 8%. So revenue growth dropped 8% as the general market, the general sector saw an increase in revenue by 8.9%. So definitely a divergence there, but it's good to see over the next 12 months, we see revenue growth projected at 30%. Which is well above that sector median at 6%. Although these numbers are decent for the next 12 months, we have to look at XPEV's history. Its 5-year historical average growth rate has been 93%. So this 30% rate is actually pretty low when you look at the company's history. And then let's take a look at some profitability numbers here. So we can see gross profit margin is at 9.7%. Which is actually pretty good when you compare it to XPEV's 5-year average of minus 2%. So the company just started making money on the cars that they sell. For those that don't know, gross profit is basically just revenue minus cost of goods sold. It tells you what a company makes on what it sells. So it's good to see that the company is making money for every car that it sells, although this number is well below the sector median of 35%. And we can also see net income margin at minus 41%, which is a pretty bad number, to just be frank. This is well below the sector median at 4.1%. So overall profitability looks okay just because of this gross profit margin, and I really like to see the divergence from its history. So good to see this gross profit margin moving in the right direction and becoming positive, but obviously net income margin looks pretty poor. And the company does have $1.49 in cash. So that's about 5% of the market cap is in cash. Let's take a look at how this company ranks out when you compare it to the peers. So I'm comparing this company to Lucid, NIO, and Tesla. So we can see here that when we take a look at the company's valuation, we can see that 3 years down the line, the company's expected to be trading at a negative 52 times PE, which is worse than Lucid and basically in line with NIO there. So valuation-wise, they're very similar to NIO here. So minus 20 times PE in year 2, and then minus 50 times PE in year 3. NIO obviously a little worse. So in terms of valuation, when you compare it to NIO, XPEV does look actually slightly better. especially when you take a look at the price to book ratio. So the company has a price to book ratio of 2.6, and that is better than all the peers. So this price to book ratio is actually pretty solid when you compare it to the peers. The growth numbers, though, is really why price to book ratio is so positive when you compare it to peers. So growth for XPEV, obviously -8% for the past 12 months. Lucid has been growing at a rapid pace. NIO, solid pace as well. And then Tesla at a good pace as well. So the 3-year compounded annual growth rate for XPEV is above NIO, but pales in comparison to Lucid, but is also above Tesla. And then let's take a look at the gross profit margin here. So one area in which XPEV really differentiates the company compared to Lucid is in gross profit margin. So Lucid loses 171% on every car that it sells. XPEV is actually making money on every car that it sells. So I think that's a stark contrast. Obviously, XPEV also makes more money on every car that it sells than NIO even. So that's awesome to see there. Obviously, it's not comparative to Tesla. Tesla's a bigger company and that has a better gross profit margin. And then when we take a look at net income margin, so we see net income margin at -41%, which is better than Lucid, and basically in line with NIO, and obviously worse than Tesla. And then let's take a look at the company's balance sheet and see what we can take away from it. So XPEV has $3.5 billion in cash compared to $2.1 billion in debt. So that means that the company has $1.47 billion more cash than debt, which is obviously very good. And then Lucid has $2.9 billion in cash compared to $2.3 billion in debt. So they have $600 million more cash than debt. And then NIO, obviously the closest peer here, has $4.5 billion in cash and then $4.1 billion in debt. So they have a net cash position of $612 million. So overall, this cash position is very good for XPEV when you compare it to Lucid and NIO. Obviously, when you compare it to Tesla, it pales in comparison, with Tesla having $17 billion more cash than debt. So interesting stuff there. I think when you look at the growth numbers and you look at the profitability numbers, they look okay. It's just that valuation, right, that doesn't look great. And obviously, the 3-year growth rate does look solid for the company, though. So with that being said, let's take a look at some analyst upgrades, some analyst ratings for the stock. So we can see here that there are 7 companies that have a buy rating on the stock, and there's 1 company that is overweight and 6 that have a hold rating, and then there are 5 that are basically bearish on the stock. So 5 to 8 in terms of bears to bulls. So let's see the recent price changes, though, the recent price target changes. So we can see that Goldman Sachs initiated the stock's coverage with a buy rating just earlier this month on the 11th. So pretty good timing for them. I'm sure they're pretty happy about the stock's movement over the past couple of days. And then we see Bank of America increase their price target from $58 to $61, which is pretty astonishing, right? That's definitely a huge upside for the company. So with that being said, it's very clear that some of these really reputable companies like Goldman Sachs, like Bank of America Securities, are very bullish on the company, which is great to see. Obviously, though, JP Morgan, it did downgrade the stock to underweight, but they increased their price target to $10 for the company. So, definitely varying opinions on Wall Street, but it's good to see that one of the most reputable names, Goldman Sachs, has a buy rating on the stock. So good to see that there. So to kind of sum it all up, this investment China is making into EVs should bode very well for XPEV and really the general EV market in China. And obviously, we're getting a massive breakout above this resistance level at about $19.90, $20. If we see a daily candle close above this level, I believe we see a significant move higher over the coming weeks. Alternatively, we could see a move down to the daily moving averages and then hold that level at about 12 bucks and move higher. So I covered the fundamentals, which obviously look pretty good. They have that self-driving unit, which could really bode very well and provide massive upside for the company over the coming years, which obviously would be great for shareholders. And then we just had Goldman Sachs initiate a buy rating on the stock earlier this month. So all that being said, it does seem like this stock is worthy of taking a look at. Obviously, do your own research in D&D, and it does seem as if the chart is breaking out. But that upside potential for this stock, if they're able to figure out self-driving in China, is definitely massive. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.